Hey, sovereign wealth builders, Simon Dixon here, and welcome to another episode of Simon Dixon Hard Talk Live. Today, the episode's going to be on the battle for Bitcoin. And as always, we're going to be doing this in two parts. In part one, I'm going to be answering the question that I got a lot on X and a lot in YouTube comments and a lot across the Simon Dixon free membership portal on where I stand on BIP 110. The battle for the Bitcoin that nobody really wants to speak about or name it. And I want to name it, and I want to make sure that I've got some clear guidance on what I'm doing with regards to BIP 110. And for those of you that don't know, BIP is called a Bitcoin improvement proposal. And because Bitcoin is an open source project, anybody is allowed to propose an improvement to Bitcoin. And then there is a process in this open source project for getting code implemented and updates done. And at the moment, we are aggressively in our, I'd say, second block war debate. In fact, if you want to be accurate, it's probably our fourth or fifth if you include Bitcoin XT and Bitcoin Classic. And then we had what ended in the 2017 block war debate, and now we've come around with the spam topic. So I'm just going to be giving you a bit in part one on what I'm doing and where you can get resources to study further so that you can decide how this impacts you and why it's important. And then in part two, the title of the New Era Finance interview that I did was titled New World Order wants to steal your Bitcoin. So New World Order wants to steal your Bitcoin. And this is New Era Finance with Michael van der Pope. And we did an interview where we were going through all these points. Now, a few updates, because it has actually been a crazy week. Now, as I said, I'm in book writing mode on my book Lockdown at the moment. And I'm writing 21 chapters and I'm on chapter 18. Chapter 19 is actually where I cover the infiltration attempts around sovereign assets. One of those is Bitcoin. I'm probably, and I'd love to hear your feedback on this. I'm going to be doing, as my next book, a follow-up, which is dedicated to Bitcoin and the entire history from my perspective from 2011, and the infiltration attempts and various things that I've seen over the years. I'll probably develop that into a book on its own while we're in this mode. But I'm on chapter 18, and chapter 19 is when I'm going to be doing this. So as part of the research, I actually had this headspace and time to really dig deep into BIP 110 and formulate what I'm going to be doing. And so while I was writing that, I thought, let me publicly release a blog on exactly where I stand on BIP 110, what I think it is, what I think you need to be aware of. And I'll go through different things in this episode as a brief overview. But this week, leading up to that, I noticed that there was a flurry of events which, when you follow the money, are interrelated and connected. One of the things we had was an announcement from Adam Back's Bitcoin Treasury Company, which I've been a big critic of over the years, because the more parts of the ecosystem that are wrapped in Wall Street, the more the financial industrial complex gets to chip away at getting as much control as it can over Bitcoin. And one of the tactics that Cantor Fitzgerald has been using is to create tax efficient structures to incentivize people to wrap their Bitcoin in a Wall Street treasury company, and then acquire or reverse merge their companies into a SPAC, a special purpose acquisition company. And Cantor Fitzgerald, which is now run by the son of Howard Lutnick, has been somebody that I've been covering over the years at Simon Dixon Hard Talk Live and giving lots of warning against. Well, we saw that BSTR, Adam Back's Bitcoin treasury company, was delayed. And it was delayed after there was a lot of controversy, released around various team members. And maybe, it's just financing, whatever it may be. But right now, BSTR, which was due to go live which would have been the second largest Bitcoin treasury company, has been cancelled or postponed, or whatever the politically correct way of stating that for now it's not going ahead. The other one that happened this week is Jack Mallers, who we've been covering over the years in terms of the reverse merger of Strike into a Bitcoin treasury company supported by Tether and SoftBank, who sold their position to Tether, and of course reverse merged via Cantor Fitzgerald and Howard Lutnick as well, 21 Capital. Jack Mallers stepped down as the CEO. Now that's got a couple of things. So firstly, if you're a Simon Dixon Hard Talk listener, you would know to stay away from these treasury companies. And so if you didn't follow that and you were a shareholder, then I'm sorry for your loss. Jack leaving and stepping down impacted the share price. But at the same time, that I was very publicly in a bit of a public back and forth with Jack Mallers around what it means to be a Bitcoin treasury company with Cantor Fitzgerald and the implications on turning into a financial industrial complex FIC node. Well, we got the announcement that he's leaving and has stepped down. And so it goes to show, I'm not sure exactly why or what it means. I'm not going to read too much into it. But it goes to show that there are things happening behind the scenes that Jack Mallers can't exactly say right now. But he's escaped the Cantor Fitzgerald FIC node and allegedly, according to his public statements, forfeited his options and various other parts. So I'm not going to talk more than what is known on the public record, but it's important to say that, these Bitcoin treasury companies and these CEOs, they're not going to get strike, potentially. We'll see what happens there. But a bit of interesting news on that. Also on MicroStrategy. So apparently Strategy is now $1 maxi. And on Monday, they announced, where they used to announce how much Bitcoin they're buying, they announced how much dollars they bought. And so now they're, cartelling to the FIC, to the STRC holders and the preference debt holders, and lightening down on Bitcoin in order to buy more dollars, to have more runway to meet dividends. And given that the convertible debt and preference shares haven't converted because they relied upon Bitcoin being in a bull market, and right now we're into a bear market. So MSTR is now $1 maxi, announcing every Monday how much dollars they're buying. And I told you, this is what happens when you wrap yourself in a FIC vehicle, because my strategy is a Wall Street financial industrial complex wrapper. And I've been covering over the weeks and over the months and over the years around these different vehicles and creating mechanisms for manipulating the short-term price of Bitcoin in combination with other nodes on the network like BlackRock and Jane Street and Cantor Fitzgerald. And when you combine these all together with Bitcoin-backed loans via Jack Mallers wrapped into a company, like a public company, you get this big Bitcoin industrial complex of fake Bitcoin in paper versions of Bitcoin in order to centralize more control into FIC and get as much Bitcoin wrapped around those wrappers as possible. And so, Saylor has basically, or Strategy, I should say, has now come up with a bunch of new methodologies and terminologies of digital credit, digital this, digital that, digital. Now there's a bunch of new ways of explaining that, oh, damn, the premium to the net asset value of Bitcoin no longer exists. And so therefore we need to come up with some new matrix in order to explain why we're diluting shareholders when our company is currently trading at a discount to the Bitcoin held on treasury. And so lo and behold, there was a call, and there was a bunch more terminologies just to explain how you can get away with dilution. Just like the Fed, when the Fed needs to print more money and dilute more, they come up with some new definitions of inflation. They change it to measuring something else. And so Saylor and Strategy are now following that. Redefine the terminology to explain why we're diluting shareholders that are meant to be paying a premium. They need you. Strategy needs you to pay a premium on top of the Bitcoin value for owning a Wall Street wrapper with counterparty risk that's designed to centralize as much Bitcoin as possible for the FIC and the financial industrial complex. And so at the same time, Michael Saylor decided to come out and share his stance on BIP 110. And we got more and more people that were sharing that as well. And so what I wanted to do is also share mine. And I wanted to do it properly. And so I've been working on this blog, and we're going to be publishing this blog. The link will be included in the description below. And I want to answer a few things. But first, philosophically, I agree with BIP 110. I've been very sharing with you that I've been running knots as a node, and I think that competing implementations are very important. I do believe that there is corruption and infiltration attempts within core. But when we're going into soft fork and hard fork dynamics, it kind of sets up a different game. And that game, I'd like to share a little bit of my experience because I went through the last one. And I went through the early ones, and I remember the very early attempts, Bitcoin, XT and Bitcoin Classic. And at each time there was like a leading character, whether it be Mike Hearn or whether it be Gavin Andreessen. And in each phase, we had a capitulation where they leave the community and they end up, being involved in a different version of Bitcoin. In the case of Mike Hearn, he actually joined the banksters coin R3 to create central bank digital currencies. In the case of Gavin Andreessen, he publicly shared how he thought Craig Wright was Satoshi Nakamoto based upon allegedly Craig Wright scamming him in terms of a demonstration with a laptop, and then ended up down the Bitcoin Cash route. And then we had Bitcoin SV as the Bitcoin Cash split off. And each time you get these further forks. There's soft forks and there's hard forks. Now, in 2017, it really came down to, there were a few Bitcoin venture capitalists. One of them was the one that I was running, Bitcoin Capital through Bank to the Future. And we ended up investing in lots of companies. But there was also a couple of other Bitcoin venture capitalists early at the time. One was Brock Pierce from Blockchain Capital. The other was Digital Currency Group through Barry Silbert. Now, later around 2017, you had Dan Moorhead and Pantera Capital. But a couple of the companies that I invested in, one of them at Bitcoin Capital was BitPay. And BitPay received one of the outside venture capital funding from Founders Fund, connected to Peter Thiel. And this is around about the time we had lots of the infiltration attempts that I've covered in other episodes. And you can check out my blog posts. I did the Jane Street one around price manipulation. I did the how Bitcoin was created. Was it a CIA op? I did the refute to hijacking Bitcoin around. You can see all these on my blog. Epstein infiltration attempts around developers. All of these you can see on simondixon.com or ask some AI to pull them out for you as well. But in 2017, it was really came down to Barry Silbert from Digital Currency Group, and pretty much every company we invested in, Digital Currency Group also invested in, and Blockchain Capital was there as well. But I remember Barry Silbert trying to pull together all of the largest Bitcoin companies towards the end of this in what became the New York Agreement. And the New York Agreement was a public letter signed by the largest companies in Bitcoin that wanted to do SegWit 2x. Now, most of the corporate side of Bitcoin was on the side of big blocks. And the fringe movement was the community that wanted to, go have segregated witness so that we could then get Lightning Network and layer 2 scaling. The old school part of the community were really centered around bigger blocks, and the community split in two around, how to scale on layer 2 and keep smaller blocks or keep the blocks as they were, but optimize to get more data in, versus those that wanted bigger blocks. And the bigger block community kind of went in their own direction. And the rest remained around Bitcoin. But there was this, at that time in 2017, Blockstream was one of the key players at the center of the controversy. And so Barry Silbert from Digital Currency Group was the one that was trying to centralize many of the venture capital funded companies. Now, at Bank to the Future and at Bitcoin Capital, we didn't sign and we didn't participate. In fact, we took the sides of the users in the user activator soft fork. And for those of you that were around then, I would very publicly go on Tone Vase's YouTube channel, and we would all talk about it. And I remember when the hard fork, actually the segregated witness, activated on Bitcoin, I was presenting publicly in Shanghai on the stage while it actually happened. And I released some videos at the time. But I remember when we were leading up to it, I actually sold some of my Bitcoin Cash because I had some on the Kraken exchange, and they delivered some Bitcoin Cash, and I got to sell it live on the Tone Vase show. Now, obviously, I don't keep all my Bitcoin on an exchange. That would be suicidal. But the ones that I had on the exchange to experiment with that, I was selling live as well. But anyway, the largest Bitcoin companies, they got together and they signed the New York Agreement. And this was a bunch of VC-backed companies and the Bitcoin ecosystem that wanted to do SegWit plus 2x. Now, what that meant is increase the block size by 2, which would require the hard fork, and SegWit, which is the soft fork. And then we had this battle around Bitcoin Cash that came around. Now, prior to that, I was living in Hong Kong at the time, and I was at the Hong Kong Agreement, which was a meeting between the most infamous Bitcoin miners in China and the developers that were in mainly America, Europe, Canada, the most influential ones. And it was an agreement to implement SegWit and then increase the block size. But there was a bit of a dispute there because it didn't happen. And that dispute was around the core developers said, well, we don't control it. If we can get consensus, we can get consensus. And so that upset a lot of the Chinese miners. And one of the most important people in the ecosystem was Jihan Wu, who was the largest manufacturing company in China for ASICs. And around about this time, we had Craig Wright being claimed to be, Satoshi by Gavin Andreessen. Brock Pierce tried to persuade me at a conference for hours that Dr. Craig Wright was Satoshi Nakamoto. And Sequoia Capital invested in Bitmain. And so you can really follow the money and see the timing of these infiltration attempts. And I've been following them over the years from an inside perspective, things that people don't know. And this is why I'm trying to document this. And I think it requires probably a dedicated Bitcoin book to do it, as well as just the current book that I'm writing. But Barry Silbert and Digital Currency Group represented the community that tried to F with, the average Bitcoiner, the average user. And the resistance against that, developed by Gregory Maxwell and Luke Dash Jr., was the user-activated soft fork. And so we were able to resist against the miners with the threat of nodes. And this really sets up the important part of the ecosystem. You have the users that are running nodes. And if you're not running a node, then you're not one of those people that has a say in the ecosystem, which means you have to be self-custody. Then you have the open source developer community, and then you have the miners, and this kind of fringes off into corporate Bitcoin, all the companies that try and produce services around it. And so really those corporate Bitcoin are often node users or miners, or maybe they're a part of the, you know, the mining ecosystem, or maybe they're even trying to fund developers. BitPay, one of the companies we invested in, that Founders Fund later invested in with Peter Thiel, they were originally funding Bitcoin until the Bitcoin Foundation came along. And then Brock Pierce came along and, you know, created Tether that was then sold to Bitfinex. And we had these infiltration attempts in the Bitcoin Foundation that was then bankrupted, but that was more decentralized funding. When it was bankrupted, the development, or a part of the development, went over to MIT in the digital innovation lab. That's when you had different infiltration attempts from Gary Gensler, who went on to become the head of the SEC. And so there's a long story of these different types of infiltrations, but Bitcoin always remaining because of that decentralized setup of miners, developers, and nodes as the key parts of the ecosystem. And then corporate Bitcoin would try and fit in and infiltrate parts of the developers, or infiltrate parts of the miners, or infiltrate parts of the nodes and become an economic node, a more important node, because it's verifying more transactions, as it were. But in 2026, we had an announcement this week, and these are not necessarily related, but I don't take anyone at face value. I look at incentives and I follow the money. I don't decide you're a good actor, you're a bad actor. I just look at the structural incentives, follow the money, and structurally, you know, what kind of agenda are you pushed down? Well, this week in 2026, we had our Barry Silbert digital currency group moment, but this time it was with Michael Saylor and Strategy. And Strategy have now announced, under a different initiative, mainly focused around quantum computing and security, that many of the largest, but this time not just Bitcoin companies, but financial industrial complex fixed nodes, are actually putting together a $15 million security budget in order to support Bitcoin security initiatives and fund developers that want to work on those initiatives. Now, again, this is probably focused around quantum computing. But when I look at the people that are involved in this consortium, it looks like a heavyweight version of the New York Agreement 2.0. And we saw Elon Musk try to do this, if you remember, around trying to make Bitcoin more eco-friendly or more ESG. And he put together his little consortium of miners. We have seen this before. So now we've got Elon, Barry Silbert Digital Currency Group, and now we got another attempt at it with Michael Saylor and Strategy. So who are the people that are involved in this group? Well, we got the big guns. We got BlackRock, we got Fidelity, we got Coinbase, who's now public. We got Galaxy, who's now a public company. We got Anchorage, who's a bank. We got ARK, we got Block, and even Blockstream. So Blockstream was on the other side of the corporate debate in 2017, even though there were, revealed funding via Brock Pierce and Blockchain Capital, and this led to some funding via the Epstein affiliated partners, and Joito, and various things that I've covered in the Epstein side before. But now Blockstream is on the corporate side, the other side of the debate. You know, whereas Blockstream before was on the side of the user activator soft fork. Now, Blockstream was funding Bitcoin developers. And so we had members there, which was Adam Back and Luke Dash Jr. And so now both of those, you know, Luke Dash is no longer a part of Blockstream. He's made, I won't put in the words, I shared this in the blog, But now we've got this factoring off of the community. We now got multiple developer funding parts of the ecosystem. And now it's incredibly healthy because we're discussing all of these, we're following the money. It's interesting how, Blockstream, who was completely opposed to the New York agreement, is now part of this consortium. And it makes sense, if this is genuinely dealing with quantum computing. But when a bunch of large financial institutions that all have vested interest in trying to control as much of the Bitcoin ecosystem get together, they do what people do behind closed doors. They coordinate on how to fulfill their interest in order to maximize what they can get out of Bitcoin and the more parts of the ecosystem that they can control. So this is a different initiative, but really the same lessons. And I think you'll find it. That Bitcoin doesn't belong to a consortium of corporates. And we've seen this time and time again, and we'll see this in the future. But you need to be very aware about it. But the only way that you get to participate in that battle is by holding Bitcoin in self-custody and running a node as well. So consensus belongs to the people running nodes. The miners add new blocks, but the nodes decide whether they're going to enforce those rules. And the developers, in service to the community through Bitcoin Improvement Proposal, BIPs, have a process for deciding what is included in order to reach consensus. And we have alternative implementations to that, which is what the NOTS movement pushed forward, which is why I wanted to support NOTS. But it's only the people holding their own keys that are going to be able to build the resistance of this network. Because if everybody holds Bitcoin treasury companies and everybody holds Bitcoin ETFs, then you're handing over your vote to the FIC. And it's up to us in order to maintain the integrity of the network. We only get one shot at this. There's not going to be another Bitcoin. Every attempt that forks off ends up a shitcoin with less security. And so the battle for what is Bitcoin and these soft fork, hard forks, very, very important. So self-custody is Bitcoin's greatest defense. And everybody has a role in participating that. You either give power to the FIC, Coinbase, BlackRock, an exchange, or you participate in this resistance. So this is the latest attempt, and I'll say what I say at every attempt at this. Nice try, FIC. Nice try, financial industrial complex. But this won't succeed because there will always be a community that are willing to create that resistance and that friction. And so what you've always seen in Bitcoin, in this open source boardroom, is what looks like chaos and carnage. And there were a lot of people during the block war debate that just said, I'm out. I don't know what this is. And that created an opportunity for dollar cost averagers to buy cheaper and cheaper Bitcoin if you're owning more Bitcoin every single month. But for some people, it's a lot. And so I wanted to record this to let you know that this is a part of, this sovereign asset that is Bitcoin, to try and remain sovereign and not be captured. And there are plenty of people that want to capture and plenty of covert operations. And so I'm going to share in the blog, and it's going to be a long blog, because it's almost like written if I were to write a chapter on this chapter. But I wanted to include it for you. So in this blog, I'm going to share what I cover. And I'm going to reveal to you right now, there is a point where I stand with BIP 110. And there is a point at which I don't. And I want you to understand that if you're going to participate in this. So right now, I'm running a node. And it is NOTS, and I will be supporting BIP 110, and I'll share on that blog exactly why. And you can't get a simple answer. So firstly, in this blog, I want to define what BIP 110 is, the spam war, and how to see through some of the propaganda, because there's loaded language that kind of tries to direct you in a certain direction. And that's on both sides. And so I title this The Battle That Nobody Wants to Name. And the reason I call it The Battle That Nobody Wants to Name is because if you're a long-term listener, you'll be very familiar with Operation Gladio. You can look it up on AI, or you can read a book like Paul Williams' Operation Gladio. But it shares the intelligence operations desire to fund war, both sides, because the war is the strategy. It's strategic tension. Strategic tension, and then monetizing what comes after the war. And I think that's the strategy in 2017. And I think that's the strategy in 2026. And one of the important things about strategic tension and covert operations is most people don't know who they work for. They don't know who they work for because they may be funded via a company, an alternative structure, a sponsorship, just buying into a narrative. But there are layers of that that leads to these different types of operations. So anyway, I wanted to clear and clarify that blog. There'll be a link below on where I stand. And it's a long article, and here's exactly what I'm going to be covering. So where I stand on BIP 110, I've already given you spoiler alert, but I want to make sure you understand the frame. It's a strategy of tension and strategic tension, and that's what we need to really be aware of. So if you allow this to get you so tribal that we end up destroying each other and going for the worst strategy based upon what seems rational if you get too radicalized into one start or one side, that you end up going all in. And I saw this in 2017 and all the attempts prior. You always get this radicalization of the community that then starts to become counterproductive. At the same time, it's okay. It exists. We'll be fine. Bitcoin will be fine. But I've seen this movie before. And so I wanted to share with you that movie. So what BIP 110 actually is, technically, and it becomes a technical conversation, but also philosophically. And I am philosophically aligned, but just because I'm philosophically aligned, it doesn't mean that I can't see the nuance in the technicality. And I had the time to go through that. And I welcome other thoughts, and I welcome comments in here, because I don't want to get radicalized into one way. But I do exactly what I always do, which is follow the money in order to map the incentives on all sides. And there are question marks on every side of this chain. Pardon the pun. And by design. And so I look at treasury companies and really this rush to the resolutions of the treasury companies. I look at Cantor Fitzgerald, their role, Tether, BlackRock, and BlackRock's desire to tokenize everything based upon companies that I actually invested in, like Securitize, and the broker that we created that was sold to Coinbase, which Coinbase is now a FIC node, and working with Larry Fink in terms of these tokenized securities. But I think it's interesting that everything is happening in the same week, and that's this week. So that's why I wanted to make sure I gave that update. And so we had the Bitcoin Security Consortium. We also had Clarity Act reaching a resolution, Trump setting up how he wants to deal with the ethics clause around his scamming that potentially he can, utilize during his term, but expires once he leaves. Jack Mallers leaving 21 Capital, and all of these things right up until we're actually getting, the activation of this soft fork and BIP 110. And so I want you to understand what an economic node is and where that actually comes into the battle. I want you to understand the game theory, and that there is actually, just like wars when we battle them out in the geopolitical section, an escalation ladder that we need to be aware of. And at what point do I come off that escalation ladder? Right now, my position is that I have a stop point on that escalation ladder. But until then, I'm on board with nodes knots, and self-custody, and BIP 110 for a very specific reason, because I believe if this attack vector exists, and this we need to understand how this rolls out, and there are several different parts to it compared to the 2017 one. And it wasn't until we actually did it, until we had the user activated soft fork, until we had the replay protection, until we had the launching of Bitcoin Cash and Bitcoin on the futures markets, until we actually had the fork off and then the break off of Bitcoin Cash to Bitcoin SV, that some of these things make sense. So I'm not going to pretend to know. I've got my experience, but there are several unique parts of that I think we need to go through, and we need to go through it now. And we need to see what we can achieve as a community with nodes versus what the miners do and what the corporate Bitcoin does, of which I admit, over the years, I became a shareholder in many of those companies. I think you can look at my track record for how I've, acted, but follow the money on me. Do the same exercise yourself. I've been selling off many of my Bitcoin company positions as they go public and as they go liquid. But I'm down from about 100 companies to under 50 companies now. But anyway, I want to share exactly what I'm doing with my node, how far I'll go, and why I want Bitcoin to go through this mechanism in order to make it stronger. And that's why I support BIP 110, in order to try and make it stronger. But I also want to make sure people understand the low time preference strategies, the game theory, the escalation cycle. And I want everyone to have the long-term game and the short-term game. And so that's what I cover in my blog anyway. And so because I was in writing mode, it's a long blog, but I wanted it to be thorough and make sure that you have it. And so that's everything that I'm going to be covering on the battle for Bitcoin part 1 and the battle that no one wants to name, i.e. the strategic tension and Operation Gladio applied to Bitcoin. And I want to make sure that you're not radicalized into doing something counterproductive and having a high time preference, short-term strategy. I want low time preference, long-term thinking here. And if this for the next year has a really big impact on price or anything, making sure you got your strategy and you don't get confused, because the people that got crowded out during the last block war missed out on some of the highest performing returns and the best place to be as a result of that. And so that's what I wanted to share. And now let's move over to at least part 2. And in part 2, we stress test some of these assumptions. Now, this interview was from, it wasn't as recent as me publishing this blog. So it was before I started writing the book. And then I took on the first week time out to do this interview. So we're going to play that interview, but we cover from, the New Era Finance blog, the New Era Finance YouTube channel, some of these things. So just before we go to that in part 2, and how he believes that the New World Order and the battle for trying to control Bitcoin and the interview that we and the points we discussed, I want to make sure you've got all the resources. So I am on now chapter 18 of my 21 chapters for the book that I've been trying to write. You can check out the last 2 episodes of Simon Dixon Hard Talk if you're interested in finding out a little bit more about it. But it's going to go out to those that are free members of Simon Dixon membership portals. So make sure you've signed up. Go to simondixon.com and you register there, and I can send you newsletters as I progress. I tend to send a maximum of 2 emails a week to keep everyone up to date. Nothing to sell, no sponsorship, no company upsell, no anything there. And we're going to open source part of the books on simondixon.com as well. So if you want to be a part of that, then make sure you got a login on there. And I've been reading your different comments on YouTube and within the membership portal. And my team goes through all the ones in the membership portal to suggest things that they'd like in the book. And so if you continue doing that, then give me that feedback, because it's actually shaping the book as I write it. And I think I'm going to be done with the first drafts of the 21 chapters by next week. And then I'll be cross-referencing it across what's listed in that membership portal. And do me a favor, put a little comment below as well if you're going to put one over there, just to help the algorithms and get people more available to this. So that is my position. And what I'd like for you to do as well is make sure you got that Simon Dixon Hard Talk live login, and you'll be on my newsletter. But also make sure that you've subscribed on YouTube, hit the bell symbol, hit all, so you get notifications here when I go live. Follow me on Rumble in case I get taken down here. We'll be streaming on Rumble. And also on X, at Simon Dixon Twit, where I give real-time updates. They've been a little bit light recently because I'm in book writing lockdown mode. And also my podcast on Apple and Spotify, and also published on simondixon.com. And so if you'd like to be a part of the newsletter, if you'd like to get that login, if you'd like to give feedback and be a part of publishing the book and the open source project as we get this out, then I'd love for you to join me. So always remember, you are alive at one of the most interesting and exciting times in financial history. Some are going to get wrecked, others are going to do really well. I want you to be on the right side of this change, and hopefully we can do it with some more peace, love, and unity, and we recognize the divide and conquer Operation Gladio. I hope you enjoy the part 2 interview on this episode of Simon Dixon Hard Talk Live. Peace. The short-term price of Bitcoin is now controlled by Wall Street, and they want your Bitcoin. They don't want you to self-custody it. They want you to borrow against it. They want you to trade perpetual futures. On the other side, you're sovereign. Sovereign means you have assets that you can access with no permission from a bank or a broker or a custodian. Completely subordinate means you are in debt to the banks for everything you own. You boycott the Federal Reserve by owning Bitcoin. You boycott the banks by owning it in self-custody rather than custody. I wake up and I say, this week, am I more subordinate or am I more sovereign? And I think it starts with...
This episode has been so much fun to record, and I'm sure you will enjoy it. However, I noticed that more than 85% of you are not subscribed to this YouTube channel. And if there is one thing you could do to support us, please subscribe to this channel. It means a lot to us. Thank you and enjoy the episode. Welcome to the show, Simon. We just had Michael Saylor on the show, and I felt like I wanted to touch upon geopolitical topics first, but given the fact that there is so much discussion and debate happening surrounding Michael Saylor and his preferred stock product STRC, I would like to touch upon that first to understand your vision when it comes to Michael Saylor, and also to the impact he has on Bitcoin, or what impact we give him and therefore the markets react to it. So I would like to take it to you when it comes to Michael Saylor and just hear your opinion on him.
Yeah, sure. And I think the question is slightly wrong, no offense to you, but it's a reflection of how people think. They think in terms of personality. So Michael Saylor is an executive of a public company. That public company has a fiduciary duty to shareholders. Those shareholders install a board, and those boards are to represent shareholders. Those shareholders are, I believe, the enemy of Bitcoin, which is the financial industrial complex. That is a complex of asset managers, banks, central banks, financial institutions that all get liquidity from managing other people's money, creating currencies, and they have a network of derivatives, arbitrages, hedge funds, ETF providers, asset managers, the most important of which are in the Bitcoin space, Cantor Fitzgerald as an investment bank, Jane Street as a appointed representative for ETFs, but also a hedge fund, Coinbase as a custodian, and then JP Morgan and various other institutions that create derivative products in order to allow people to speculate. Now, what has Michael Saylor created? Well, he had a public company, and that public company had software connected to intelligence. So already I have questions about that. But in order to recover his company, he did a Bitcoin strategic reserve strategy. All good. But he started eventually turning the whole company into a Bitcoin strategic reserve company. And what that means is that the nature of the products that he created were around speculation and arbitrage of the fact that he effectively transitioned from a software company to a semi-quasi ETF with lots of counterparty risk and no definition in the middle. So what we turn to is a vehicle which is subordinate to the financial industrial complex that had this huge premium per share over the amount of Bitcoin he had on his balance sheet. So at its peak, it was, say, over 3. And now it's approximately, depending on what gauge you use, either a discount or 1.2. And so what that means is that right now there is, by some measures, a premium over the discount, but the controversy is around he started issuing other securities. One of those was a convertible note. And a convertible note means that you borrow money from the type of investors that invest in corporate debt that want to receive a yield. But if the price of Bitcoin goes up at a certain point, there's a trigger point where it converts into equity. And so once it converts into equity, it dilutes the shareholders because it issues more equity, and he can borrow money in order to get more Bitcoin. And so then the key metric became the amount of Bitcoin per share, but then there's debt. And so calculating the premium or discount became a complicated topic. Then he started going further and further into structured products. And so when the price of Bitcoin is going down, what happens with that convertible debt? Well, if you raised about $10 billion, you've now got $10 billion that at some point may not convert if the price of Bitcoin doesn't go up. So now you've got subordination to not only shareholders, but also bondholders and debt holders or convertible note holders. And so around that, he created another product. And that product was those that want to receive high yield, comparing it to a money market fund, which I think he called digital credit, which is extremely misleading because it is, in fact, a preference share. And that preference share is designed to stay at $100. And then whenever it goes below $100, you need to either arbitrage it back up, or you need to give people a higher yield in order to incentivize them to buy it. And the other way, when it goes up. So now what you've done is effectively you've created subordination to equity holders, debt capital markets, and also a vehicle for hedge funds and arbitragers to take those 3 products and manipulate the price of Bitcoin, which is what the hedge funds can do. So thanks to this, because we now have approximately 850,000 Bitcoin in this vehicle, we have created a tool which in a sense acts as a central bank for paper Bitcoin. And I'm very careful to say that. Paper Bitcoin because it's not real Bitcoin. It's Bitcoin that's held at Coinbase. And Coinbase is another public company that is subordinate to its shareholders. And they have lots of different financial products. Some of those is a custody, some of it is prime brokerage, some of it's leverage, futures, perpetual futures, everything. And so do we have a clear segregated way of understanding what Coinbase is doing with that fund? Well, fine, legal contract determines. But anyway, the point is that now we have, with the combination of the Bitcoin ETF, with the combination of other Bitcoin treasury companies that are taking parts of the most important ecosystem, wrapping them up into a Bitcoin treasury company. And again, I don't say David Bailey, I say one of the largest Bitcoin media companies, a magazine, a digital outlet, one of the largest annual conferences, and a hedge fund wrapped up into a Bitcoin treasury company where Cantor Fitzgerald is doing it, and then he did the same with Jack Mallers, and now you get one of the other parts of the ecosystem owning Bitcoin and borrowing against your Bitcoin. So now you got borrowing against your Bitcoin. What else do you do? Well, maybe you take Blockstream rather than add them back, and then you try and wrap that into a Bitcoin treasury company. Then you also do the same with the Trump administration and Eric Trump and Donald Trump Jr.'s mining companies. Then you do the same with a Bitcoin ETF. So now you've got approximately 3 million Bitcoin across Wall Street wrappers, with strategy being the perfect vehicle to manipulate the price of Bitcoin, with Jane Street, the hedge fund, integrated as an appointed representative where they can issue Bitcoin ETF paper shares. And anytime you want to crash the price of Bitcoin, you can just say, hey, I'm going to sell 32 Bitcoin at $77,000. And then I'm going to buy back 1,555 Bitcoin at $66,000. Now, you can't do that forever, but then that creates a discount to stretch. And now you create an arbitrage vehicle that says if the debt doesn't convert, then he's going to need 10 billion of liquidity. He's got $55 billion worth of Bitcoin. We can control the price, arbitrage it, and make a shit ton of money so that we can then crash the price, margin call those that are borrowing against their Bitcoin, and end up with much, much more Bitcoin in the custodians, which is Coinbase. And so I have no problem with Michael Saylor. I have a problem with the incentives, because this is architecture. And so all this to say that the short-term price of Bitcoin is now controlled by Wall Street. And they want your Bitcoin. They don't want you to self-custody it. They want you to borrow against it. They want you to trade perpetual futures. And they want you having a 10-minute strategy so that they can then rug pull your Bitcoin whenever you want it. Now, fine. Bitcoin is for everybody. I'm not saying this shouldn't happen. I'm saying this is happening, and our resistance against it is not doing what Michael Saylor tells us to do. Because he went from saying that everybody should own Bitcoin in self-custody to everyone should put it in a Wall Street wrapper, to everyone should leverage it, to everybody should wrap it in an Ethereum smart contract, to everybody should use it as digital credit, to everybody should make sure that they buy more and then sell it at the same time as buy it in order to get the optimum vehicle, until eventually there's a bunch of people that don't have any Bitcoin in self-custody, and the financial industrial complex has managed to steal as much Bitcoin from you, and they have the perfect arbitrage vehicle for controlling the short-term price of Bitcoin.
I think there's so many questions that I have when it comes to this, but I had Michael on the show and I actually said, like, he's not as relevant as we all make him, but there is some sort of narrative created surrounding him and the product that he designed in order to push the price even more down, in order to get more fear in the markets, in order to confiscate more Bitcoin. But when we look at the product of STRC and the fact that it's just depacking and there's so much fear surrounding that, what do you think are the outcomes that are going to happen after this in the coming few months when it comes to STRC, but also to Bitcoin?
I think strategy as a vehicle, as again, I said, Michael Saylor has a fiduciary duty to his shareholders. The vision that he has with his shareholders to centralize as much Bitcoin as possible and increase the number of Bitcoin per share. But he has conflict of interest with stretch holders and his debt holders. That creates an interesting scenario. I do not believe the goal is to send MicroStrategy bankrupt. I think Wall Street wants strategy to exist for as long as possible because they have an arbitrage vehicle for hedgies to manipulate the price of Bitcoin. And that's why it is the highest levels of derivatives and calls and everything around it. It is just an arbitrage vehicle, not a Bitcoin accumulation vehicle. An arbitrage vehicle for centralizing Bitcoin. Don't believe the hype. His pitch is digital credit, innovating Bitcoin, adoption, all that stuff. No, it is an arbitrage vehicle for centralizing as much Bitcoin as possible. Now, around that, Cantor Fitzgerald can try and get as many Bitcoin-backed loans as possible, try and do as many margin calls as possible, and send as many of the other Bitcoin treasury companies into Chapter 11. Because once you crash the price of Bitcoin, do a bunch of margin calls, centralize as much Bitcoin as possible, then you want to lock in the price of that Bitcoin at the lowest price, just like FTX did at $17,000, just like Celsius did at $40,000, just like Voyager did at $35,000. Then you lock in the dollar value of the price, you do some M&A, and the financial industrial complex consolidates. But strategy is the goose that lays the golden egg for our enemies. So Bitcoin is money for enemies, and strategy is our enemy. We resist with Bitcoin in self-custody and staying away from borrowing against your Bitcoin and making sure that you become your own custodian, rather than being a part of the complex that gives our enemies more power to control the short-term price.
What fascinates me is that we are like in the last inning before the Clarity Act is going to be approved. And until then, it seems like all the market makers or all the parties, the hedge funds, the governments can do whatever they want in order to confiscate as many crypto as they can. How much of a relevance do you see, or like coincidental with the Clarity Act being approved within a few months and the fact that this is happening right now?
Yes, you've got to rewind back a little bit. So we had the Genius Act. What did the Genius Act do? The Genius Act had nothing to do with Bitcoin. The Genius Act was the mechanism for giving banks a head start because they could use their reserves at the Federal Reserve as collateral for issuing a stable coin, as long as they had reserves at the Federal Reserve. It also gave them an advantage, saying that if you want to pay yield on your stable coin, then you need to have a banking license, which ties into Clarity Act, which means that immediately Kraken went out and became a bank. And so now you have a vehicle for turning stable coins into Federal Reserve notes so that you can back them with US treasuries that are issued and custodied by Cantor Fitzgerald. And so again, all this was a mechanism for creating a covert central bank digital currency. And the number one lobbyists in this legislation was Bank of America, Citibank, and JP Morgan. JP Morgan is the one that is creating a covert central bank digital currency. So right now we had to pass legislation to say no CBDC until 2030. That's because they want to give a regulatory head start to the banks to issue stable coins and to technical companies to have less of a head start because they can't charge yield. And so what does Clarity Act do? All Clarity Act does is it puts everyone in a box. Bitcoin's not impacted because already you can self-custody it. Already it's classified as property for tax purposes, and it's already a commodity, and the only thing that regulates it is the exchanges that are engaging in Bitcoin trade. So are those exchanges going to be regulated by the SEC as securities, the CFTC as commodities, or are they going to be treated as money regulated by the OCC and the Federal Reserve? And so that's all Clarity Act does. What else does it do? It allows us to accelerate the World Economic Forum vision of you will own nothing and be happy. i.e., you take the real asset and we'll custody it, and then we'll issue you a token that is programmable so that we can then just give you an IOU of the asset and we hold the asset for you. Then we can manipulate the price through the financial industrial complex, derivative complex, and we can create a police and surveillance state through the programmability of these digital tokens that will tokenize everything, which was what the head and the interim CEO of the World Economic Forum wanted, Larry Fink. And Larry Fink ended up acquiring some of the companies that were working on security tokens that I invested in, for example, Securitize, custodying with Coinbase, another company I invested in that will hold the custody. And even the brokerage that we created at my company that we sold to Coinbase, Bank to the Future, the brokerage is now being used in a partnership between Coinbase and Larry Fink to securitize everything. This is the World Economic Forum's vision. It has zero impact on Bitcoin. It just literally says how you can issue securities, how you can tokenize everything. And then there's a resistance built into it with all the fraud that the Trump administration has committed through World Liberty Financial. And so you now got 7 Democrats that will effectively say, we'll approve it, but what are you going to do for me? Because of all this fraud you committed with UAE, selling pardons, CZ, Binance, which ended up regulated in UAE, and all the Middle Eastern policies that are being negotiated in exchange for multi-billion-dollar bribes backing those stable coins issued through Binance between UAE and the Trump administration and World Liberty Financial, which is 49% owned by UAE, also owned by the Witkoff family, that is the envoy to the Middle East, also supported with Howard Lutnick and Cantor Fitzgerald with the Trump administration family office. This is just really nice move into the Middle Eastern situation. But Clarity Act is just power to the financial industrial complex with waving we want to become the center of crypto, when the real center of crypto is actually being built out in the tax neutral havens in the Middle East and in various islands of the British colonies like Cayman Islands and everything else.
If you talk about like the entire fact of stablecoins, which is essentially just making a digital version of all the fiat currencies that we have, which then decreases the amount of privacy we have and the amount of control the governments can have on you, have actually increased through that. But then there's a certain group that's actually praising tokenization, which with the recent SpaceX IPO, everybody's trading on chain because you can all trade the assets. But ultimately, tokenization is also one of those next steps in order to get more control. Because if you own the token, you don't own the actual asset beneath it or the collateral beneath it. Someone else owns it and can generate a yield on top of that. What is your stance on tokenization and the impact that we will have on us as regular persons?
Yeah, it's the opposite of what Bitcoin was created for. This is to give more power to the police and surveillance state in a regulated environment with programmable money that will be integrated with your social credit score that we're currently building on X and the AI data that we're currently sharing with all our chat apps, integrated into Palantir, which is the police and surveillance state that's being built out in war zones and coming home right now. So this is just part of that. And tokenization, through staking mechanisms. So when you create an Ethereum ETF, the more ETH that is held within the Ethereum ETF, the more stakes you give to BlackRock and the custodians. And the same with stable coins, because they're issued on these proof of stake platforms. And so this was simply a covert operation through Silicon Valley funding foundations that created founders that kind of pretend they're doing decentralization, incentivized through pre-mined shitcoins that create proof of stake networks that end up creating what the intelligence agencies and law enforcement always wanted, which is programmable securities and programmable money. And so focusing on that side, you've got this PSYOP, covert operation. At the same time, the reason you're getting stable coins in America is because America is the vehicle for doing this public-private partnership. You get the Trump administration to change the rules and the laws. Then you issue them through private companies. And then their artificial intelligence that's being built in America is integrated into these stable coins as more and more agents start to use programmable money as a predominant form of money in the digital era. On the other side, you have projects like the Bank for International Settlements, which created Enbridge. Enbridge is a network of central bank digital currencies that circumvent SWIFT. And so programmable money is also being used to kill the dollar. And so what you saw is that in UAE, Enbridge became the predominant home in the Middle East, and then it connected into the Chinese central bank digital currency, the Saudi CBDC, the Hong Kong CBDC, the UAE CBDC, and the Thailand CBDC. So this is a parallel programmable central bank digital currency network that's being built to circumvent SWIFT, while the dollar becomes Fed Now, which is the CBDC in America via the Federal Reserve, with stable coins on top, with advantages to the existing legacy banks to issue those in partnership with the technology companies. And tokens is how you get all of the custody assets to the custodians while issuing a programmable IOU of the asset so that you can own nothing and be happy. What does be happy mean? Be happy means eventually AI will drive you to a universal basic income, and that will be paid via a stable coin. So we'll own the asset, you will own nothing, and you'll be happy because we'll give you a universal basic income. And Bitcoin is the resistance against those forces.
It's so fascinating because there are so many factors that are so hard to grasp when you're just like trying to navigate into whatever there is happening in this planet. And I think I've listened to the recent hearings on the Clarity Act and everything that went on to tokenization. And I think it was Elizabeth Warren who said the Clarity Act will destroy the economy at some point, or at least it has the attention to do that. And I just don't understand why she would be saying that publicly.
Because you think of politicians as people that are representing the American people.
No, I'm not. I'm actually against most of them, to be fair.
Exactly. So most people think, why is she so crazy? Why would she say such thing? These are not principled people. These are pay-for-rent prostitutes of the lobbies. The biggest interest is the banking lobby, the insurance lobby, the military lobby, the technical lobby, the Israeli lobby. These are the ones that actually determine policy, right? You go down the list, Big Pharma, and they pay Congress people, Senate people, and the military lobby through the deep state can create blackmail operations like the Epstein operation to control judicial if they want. And so this to say, people still believe that politicians represent their people. Their job is to create a narrative that is acceptable to their group while they serve the interests of lobby. And Elizabeth Warren serves the banking lobby. That's her number one funder. So in order to understand a politician, you just have to look at who they're paid for in the most degree. Now, and then most people think, but regulations is something banks don't want. Big companies want moats. They want to keep out small businesses. And then so they can pretend they're trying to protect consumers when all they're doing is they're building a moat and serving the bank lobby. And that's what Elizabeth Warren does. She's not an idiot. She's incredibly talented at her job. The idiot is the people thinking that she works for them and that what she says is true. She has no principles. They are all paid for rent prostitutes, including Trump himself. In fact, the higher you get in politics, the more compromised you have to be.
I think, well, I mean, I'm living in the Netherlands and I've had many Bitcoiners on the show. We had a conversation with Jeff Booth, and he's fascinating in his vision on how he is living in the Bitcoin ecosystem in the way he thinks, which is completely the opposite of like normal human beings. But actually today, there was some news that came out on the unrealized gains tax that we have in the Netherlands. It has been a global topic, 36% on paper gains you have to pay. They couldn't pass it through. They actually went back into the drawing table and they have revisited it. And the only adjustments they made so far is they reduced it from 36 to 35%. And that's just a big joke in my opinion. But is that an attack to anyone holding anything in order to push them out their properties, push them out Bitcoin, and push them out their assets in order to get the control back? And if that is the case, what advice would you give to someone living in a country like the Netherlands?
Yeah, this is a really interesting topic. So when you follow the money, I deal with, again, you asked me about Michael Saylor. I say, forget the character, talk about the incentives. You asked me about Elizabeth Warren. I said, forget the character, let's talk about the incentives. You asked me about Netherlands and unrealized gain taxes. I say, forget about the character because it will be painted as a leftist movement in order to tax the billionaires so that we can redistribute wealth through a Robin Hood theory to those that are really on the wrong side of these K-shaped economies that are, by the way, created by central banking policy. But anyway, so let's forget about the policy and actually look at what will happen. Well, what will happen is that whenever you introduce an unrealized tax, you have to understand that that's a tax on the people, but the institutions hold their assets offshore via corporate structures that have exemptions from those policies. So it's an attack on the civilians. So if you charge unrealized taxes, the billionaires have corporate shells where they're exempt from those very policies. It's actually asset stripping of the regular people that they're meant to be servicing. And what else does it do? It takes those that have assets and makes them leave the economy. This is what they did in UK. And so in UK, you implement tax reforms that deliberately put stress on the markets so that all the millionaires and billionaires that have the assets leave. And then you're left with taking away the assets from the average person that didn't leave or doesn't have the corporate structure in order to exempt themselves. So this is engineering a collapse of the economy by design through austerity, through tax, policy. And what does it actually do? It decreases tax receipts. Because as you said, when all the millionaires and billionaires leave, you end up with a decrease in the amount of tax. That's what's happening in UK right now. You got inflation, you got growth that's very bad, poor, and you've got tax policies that are leaving to all the wealth, which is reducing the tax income. That's an asset stripping exercise by the financial industrial complex. It's normally when they want to acquire key assets. So if you remember the Dutch disease phase, when everything went around like the oil and LNG industry and it caused a bit of a depression, that leads to you being able to acquire assets on the cheap. What is the key asset that Netherlands holds that is one of the keys to the future of the world? AI, part of the AI infrastructure, TSML?
ASML, yeah.
ASML, that's the one. ASML is the target. The country is being asset stripped, and the billionaires and the millionaires will leave, and those with the corporate shells will be able to exempt themselves and acquire the assets. This is a multi-cycle acquisition strategy to asset strip a country. Now, why would a politician do that? Because politicians are paid for rent prostitutes of lobbies. And the financial industrial complex was the leading power that was left over when the Dutch Empire preceded the British Empire, that now we have the American Empire. And so the financial industrial complex is asset stripping the West right now in order to reallocate capital in a multipolar world. And Netherlands is an vital node, as is UK, as is Europe, as is America, in order to concentrate wealth upwards in this whole AI and robotics trade.
Well, and then if we talk about that topic, if you are like a 25 to 45-year-old living in this country, you're stuck in the middle, you're feeling like everybody's taken, or everything is taken away from you. Like, what is the game plan?
The game plan is you need to work on a sovereign strategy and stop believing that you can vote your way out of this, because you can't. You either are going to exit and leave, set up a structure that allows you to hold your assets via trust outside, if those, however, to the extent at which you can use those, or you're going to stay and say, I'm going to pay the tax. But you need to basically, the traditional strategy of beating inflation is to own assets in a K-shaped economy. And then when enough people do that, what do? They do unrealized gain taxes. So then you get slowly stripped of your assets. And so sadly, unless you can find a way of staying in the Netherlands and exempting yourself, then you're going to hold assets to beat inflation, and then you're going to be taxed from those assets, which is then going to create selling pressure, which will decrease the value of the localized assets as well. So the only way out of that is to have a global asset, which is an impact at the geographical level, in a structure where you're not subjected to those unrealized taxes. And that can only be done in two ways. Either you can continue to live there and you hold your wealth where you're going to retire and you build it where you're going to retire, or you basically stay in the country and pay those taxes, or you leave. It's asset stripping, and nothing stops that train.
I think if I look back, I've been diving a lot into what happened in the 30s and what happened in the 20s of last century. The best way to asset strip everyone is to let them think that the markets are going well. Let them take a lot of debt in order to like leverage themselves and then crush the entire system to strip off any more assets that they have. And then it becomes some sort of communist state like Germany has been for many years in the 30s. And then you end up by taking even more control out of all the assets that are in the planet or in the country itself. Why do you think, or actually maybe the better question is, do you think that the current period resonates with 1928 or with the 30s of last century? And how could we prevent ourselves from like going down in terms of a depression and everything in that sense?
I don't think that there is any way out for what the financial industrial complex will do to the West right now in the asset stripping phase. The reason is because everybody is giving them more power. Let me call the financial industrial complex the FIC for now.
Yeah.
Everybody is now contributing to index funds and ETFs. ETFs is now 50% of the market. That means that you have given BlackRock, State Street, and Vanguard 50% of all the purchasing power of the markets. That is the new neo-currency war. The Dutch created the construct of central banking, the construct of the limited liability company that led to the Dutch East India Company, and the central bank. The British then used the same construct to build the largest naval that we copied from the Dutch. And now America built out the military industrial complex, the Federal Reserve System, and BlackRock. And BlackRock is now the neo, let's call it the American vehicle that now controls the ETFs, controls the AI technology that $25 trillion of funds, central banks, sovereign wealth funds, pension funds, endowment funds, treasuries are using in order to scenario plan and allocate their assets. And so ETF is the new currency war. So you've now got currencies, ETFs, in order to dictate the flow of capital, stock markets and bond markets. They are centralized to the extent where the moment the Federal Reserve wants to do a crack up boom, it can just decrease rates and start buying bonds, which looks like the strategy that they'll be following next, which is where you effectively put everything into the stock market and then you manage capital outflows. ETFs into emerging markets are significantly higher than they were. Like they're up to like 40% of all those ETFs. So BlackRock is managing flows into emerging markets while concentrating all the wealth. 92% of the stock market is owned by 10% of the institutions in America. And then at the same time, just pumping everything. Now, what if they wanted to do what they did in the 20s? Well, all the Fed needs to do now, we're told Trump's taking on the Fed. No, he's giving them stable coins. He's giving more power to the FIC because he's paid by the FIC. And BlackRock's assets under administration is going up, which means their power is going up. And so if they want to engineer a crash, then they can just regime change the Fed, install Kevin Warsh, and then Warsh can increase rates. And they've got all the justification that they need. AI is creating a bad employment market. We've got the crisis from the closure of the Strait of Hormuz that's led to an inflationary environment. And we got the employment data. So really, they should be hiking rates. But those rate hikes are kind of being offset right now by the productivity of AI, which is creating structural unemployment in the productive sectors like tech and finance. Now, the government is employing in healthcare sector, which means that they're making up for those employment numbers by having young people look after old people. And those are in a pension crisis where the numbers don't add up. So the only thing they can do is inflate away the debt, which means structural inflation, AI that leads to unemployment. You just need to be aware of that. And what can we do about it? I don't think anything changes, because the politicians are the FIC. So how do you fight back against the FIC? Well, you boycott them. You don't buy ETFs. You manage your own money. You don't. You boycott the Federal Reserve by owning Bitcoin. You boycott the banks by owning it in self-custody rather than custody. You boycott the banks by not borrowing against your Bitcoin and not leveraging up, not mining fiat currency with your Bitcoin in custody to give them more power. And you build your own parallel communities. And you make sure you're investing in the assets, and you recognize the real battle here is not left versus right. It's not the immigrants versus the natives. It is not Republicans versus Democrats. It is not Muslims versus Jews. It is not white people, black people, Asian people. These are all manufactured narratives to distract you from who's really in charge. We've regime changed the politicians in the UK. I don't live in the UK. I left in 2015. But we've regime changed 7 times in the last 10 years, more than we have in the last 40 years. And the next leader is going to be the same agenda, because they all work for the same power structure. You vote with your money. And if you give your money to the FIC gets more powerful. So you have to boycott, and then you have to build parallel community structures and invest in decentralized versus centralized systems. Run your own AI, run your own self-custody structures. Don't invest in pump and dump scams with perpetual futures, in ETFs wrapped in treasury companies so you can borrow against it and become a collateralized FIC obligation. That's how you win.
What do you think of the case that we see? We just had Fable 5 coming out of Anthropic that got banned by the government in the US because they don't want other countries to be using the actual AI tool. But then the topic came up of decentralized AI for whatever it actually means. You mentioned run your own AI. What's your thesis on like decentralized AI in that sense?
I think it's one of the most important things that we could do. The fact is that China is leading the open source movement for AI, which is the antithesis of what people thought it would be. Because America is moving to a control grid, and they seem to be engineering a pump and dump cycle. That, by the way, here's the interesting thing about the AI bubble. Firstly, I think AI changes the world, and those that own the assets of AI is a very important part of protecting yourself. However, there seems to be an AI bubble where the VCs and the venture capitalists are selling into these IPOs, overvalued IPOs, and lockout clauses. And then the Federal Reserve controls the ability to rug pull the economy 100%. But there's also 3 structural rug pulls that China can pull if they want. One is that London, like New York, has significantly more paper derivative contracts of gold, and Shanghai has all the gold. And so the second you want to pull that lever, Shanghai doesn't have the structural derivatives paper contracts that are not backed by the actual physical. The West does. China also, if they want to start selling their treasuries, which they've been doing in a very clear and managed form, can blow out the yields, which would then need to Federal Reserve intervention to get those 10-year and 30-year bonds down. So they've got the bond market and the commodity market. They've also got the stock market, because what have they built in AI? They've built a frontier model that is 10 times cheaper at 90% of the efficiency with an open source movement. With the strategic timing of an announcement of another DeepSeek moment, you are getting massive malinvestment. Why is SpaceX, after raising billions and billions and creating an ATM where they can print SpaceX stock at a 2 trillion valuation, to acquire as many companies as they can. Why do they immediately move to a $20 billion debt offering? They want to raise everything they can while they're here. But why were they also in Beijing recently? Because it was the executives of the technology companies that were begging Xi Jinping. Elon had to make sure, are you going to give me my rare earth minerals that I need? Tim Cook of Apple needed to say, are you going to allow us to continue producing iPhones cheaply in our warehouses in China? Or is that going to go to Huawei? And Xi Jinping would have said, you can continue to do it, but we're going to be creating our own infrastructure. And we've now got Huawei on top of our own chips, on top of DeepSeek. And the Chinese government, for the first time, started investing in DeepSeek software through their hardware, robotics, and AI trade. So if China wants to rug pull the stock market bubble, rug pull the bond market yields to push QE again, and rug pull the commodity market, they can. But rather than do that, they met in Beijing, and Xi Jinping told Trump, hands off Taiwan, we'll both become chip independent, and let's cooperate with your tech bros. And let's build the one world control grid that is actually not an AI arms race. We can rug pull the West once you've actually raised all the money, invested in all the capex, done these extreme valuations at the highest energy costs, sold 10 years revenue forward in a model where everybody's paying based upon a narrative that we created that we're in an arms race, and if we don't do it, then China's going to win. China controls the market. AI controls the MIC, the FIC, and the TIC need China. They're not in a battle with China. They need China. They're not going to bring iPhones home and start creating them at 10 times the cost. The only thing that they're building is AI and robotics to replace people's jobs in the West, so that you eventually end up on a universal basic income. Just stop listening to what the media and politicians are telling you and the Silicon Valley bros on their podcasts, and listen, follow the money, and understand the structure of what's happening here. And then you'll realize how different those paths are.
I mean, Simon, it's fascinating to hear you speak about all these topics, but one of the questions that I actually have is, like, you mentioned before that you've been investing into companies yourself, but how do you distinguish the two, like the vision that you have and investing into companies on the other end?
Yeah, so when I first got into Bitcoin in 2011, I started investing in all the Bitcoin companies, and I built a company. Ironically, the company that we built, we ended up selling to Coinbase, but it was the BlackRock of Bitcoin companies. You know, we were giving people access to buying Bitcoin companies like Coinbase, Kraken, BitPay, Robinhood, Circle, and over 100 of the largest companies in the sector. And then I was co-investing in them, and then they'd give us more allocation because no one wanted to invest. And we ended up with all this private equity, and all of it one by one got co-opted by FIC. Now Coinbase went public for like $100 billion and ended up buying our company to work with BlackRock to tokenize securities. So it's a very ironic story. But my personal journey has been that as you grow, there is a very sophisticated compromise network through debt markets, equity markets, and then just point blank leverage that drives you into a subordination structure where you become subordinate to capital. And that subordination then leads you to what we talked about with strategy in the beginning. It doesn't matter what you're saying. It's who you work for and who controls your voting rights and who you're in debt to and who's got leverage over you that determines your behavior. So what I've done is I've now focused on, imagine a spectrum of completely sovereign and completely subordinate. On one scale, completely subordinate means you are in debt to the banks for everything you own. You've got shareholders that control the majority of your voting rights and structure. You are dependent upon one job. You have assets that you can only gain access to when the bank or the broker gives you permission. You hold your gold with a custodian, your Bitcoin with a custodian. Your government will determine whether you have to sell your assets or not through unrealized gains. All of these are subordination vehicles. Your assets, your passport, your work, your business are all subject to one jurisdiction. That means you're completely subordinate, and you will be subjected to the rules of the whims of those that are in control. On the other side, you're sovereign. Sovereign means you have assets that you can access with no permission from a bank or a broker or a custodian. You have multiple income streams that exist in multiple jurisdictions that are held within multiple structures, whether it be trust, whether it be self-custody, whether it be money that you own via, these are all the types of things that you need to do. Now, over time, I sold my business and I've gone from 100 private equity investments as they went public down to about 40. And then I transfer that into an allocation of, I don't want to talk about it for security reasons, but an allocation of what I believe is the most sovereign place you can end up. And that's my journey. Is it a journey? And then you decide where you live. This is like a 10-year plan that everybody needs to set today. Then I start thinking about, what if my website gets taken down? I'm subordinate to YouTube, to X, to Spotify, to Apple, to ChatGPT, to Anthropic, to Amazon. And I work through that and I go, well, what's an alternative to that? And it's overwhelming if you try and do everything at once, because you're not. Well, maybe I can start posting on Nostr. Maybe I can start hosting some of my web services on a more decentralized structure. Maybe I can hedge my bets from fully subordinate to US structure to having US structure, Chinese open source structure on my own environment, and maybe a decentralized structure. Well, it doesn't exist. Can I invest in it? Is somebody trying to create it? And so that is my decision making now. My day is I wake up and I say, this week, am I more subordinate or am I more sovereign? And everybody needs to start that journey today. And I think it starts with small actions. One action is maybe you have no Bitcoin in self-custody. Learn self-custody. Learn how to run a node. Another action is, who are the custodians that could tell me my money's over? Maybe I need some stable coin. But what happens to those stable coins? Can they be frozen? Okay, what's the alternative there? Do I need a community bank versus a large multinational institution? And one by one you work through it. Well, what jurisdictional exposure do I have? And you work through it bit by bit. Now, that's a game for eventually the wealthy. I get it. So your first job is to own more Bitcoin this month. And guess what? We are likely, don't trade upon this, I could be completely wrong, but we're likely in an extended period of market manipulation to centralize as much Bitcoin as possible for Wall Street. Which means that if you're buying every single month and dollar cost averaging, you might be getting cheaper and cheaper Bitcoin every time you receive your fiat currency. So you're taking your fiat currency, you're exiting, you're learning to self-custody, you're running a node. That's the first step. Measure your wealth in Bitcoin, so the further the price goes down, the more Bitcoin you end up with, rather than measuring your wealth in fiat currency. And so through this mechanism, you're becoming slowly but slowly more sovereign, because what can you do with that Bitcoin in self-custody? Well, you can own it without a bank, you can spend it without government permission, and you know the monetary policy no matter what the central bank does. Same with gold. Same with other things. So you work through these strategies. And all I'm saying is, every week ask yourself, did I take an action that made me more subordinate or more sovereign? If you're more subordinate this week, then do something that makes you more sovereign this week. And do that for the next 10 years. Because everything they want you to do is to become more subordinate, more centralized. You will own nothing and be happy, because we're entering into a world of the asset owners, which is fewer and fewer people with more and more wealth, And those that are going to be on the UBI programmable money, Orwellian social. Now, if 100% of your money is fiat currency, then you're 100% subordinate to the CBDC stablecoin structure. If only 1% of your money is in fiat currency, because you've got enough for 6 months in your bank, then you can lose that 6 months and you still have the rest of it. And that's the ratio. We all have to be subordinate to a country, to something. But it's going to be, how can I get the ratio more and more to more sovereign? And that's what everyone should be doing.
I think that's a really good monologue. And me personally and a lot of my friends are on that stage of becoming more sovereign, clearly understand a little bit more about how the world actually works, also due to the content that you create. But there is still a big hurdle in order to make the step of like leaving a country. And as you have left the country 11 years ago, how did that transition for you?
Yeah, it's a very difficult decision to make. And it depends. Have you got children? You know, your family life, all that type of stuff. So, you know, it's easier to make that decision the less dependencies you have. It becomes harder and harder to make that decision because most people, they end up with a physical business or a physical job connected to an office with a tax structure they understand, a community that they built, a family that they love, you know, all of these things. They tie you into a jurisdiction. So the longer you delay that decision, the harder it gets. However, the wonders of the British Empire and the Dutch Empire were that the wealthy still want to live in UK and Netherlands, but they want exit vehicles. All this to say is that once you become more wealthy, you have the ability to become more sovereign, because then you can afford the structures of legally owning your assets in another jurisdiction while living in one jurisdiction. And sadly, most of those assets are only available to you when you're willing to spend more money. But with more and more AI tools, I'm starting to notice that the cost of that is going down significantly. These tools are going to be available through AI agents in the future. And so those tools, you know, everything is about ownership. So what was it I said? You know, about owning your own Bitcoin. Well, if you own your own Bitcoin, then it's not pretty tax efficient if you own it. But what about if you own a trust structure and that trust structure owns that Bitcoin? Then you need genuine substance in a foreign country. That's expensive. But maybe you can delay that decision. So, you know, again, these are big decisions, but there are incredibly wealthy people that live in America that are not subordinate because they've divvied up their wealth around these global opportunities that exist now and are more accessible than ever before.
If you discuss all the sort of attacks that are happening when it comes to Bitcoin, or at least confiscating as much Bitcoin as possible by Wall Street and like the FIC, how do you see the coming 5 years for Bitcoin in general? Like, is there not some sort of fear because it's the opposite of what Wall Street wants, which is like getting all the Bitcoin instead of you?
Yeah, the future of Bitcoin is a battle between centralization and decentralization. Fortunately, there are some very fortunate trends that I believe are happening on the macro and geopolitical side that will help us. One of those is that there was originally a lot of centralization of Bitcoin mining in China. When China decided that they didn't want to support the industry, it relocated, but a chunk of it went over to Wall Street in America through Texas and created a centralization force through Wall Street. BlackRock now has ETFs and invests in all that, and they're trying to gain more and more control there. Now, I believe that the financial industrial complex, the FIC, is systemically asset stripping the West in favor of a trend towards a multipolar world. The largest sovereign Bitcoin miner in the world is Iran. And that was probably with nuclear energy. And that was then integrated into a structure with UAE that now has left OPEC, has FX swap lines, and is hosting a network of Enbridge central bank digital currencies. At the same time, they've integrated into Hong Kong. Hong Kong is the front to China. Hong Kong is now doing a lot of changes there. UAE became the center of much of these crypto and Bitcoin companies. El Salvador built a sovereign, Bitcoin strategic reserve for their country, where you can look it up on chain. Now, they still have a lot of subordination to IMF, but as that value builds, they'll have more negotiation leverage. We started to see that the second largest sovereign Bitcoin, miner, so you had the public companies in America, you had China, you had Russia, you had Iran. A lot of these countries hate each other. So if we're moving to a world of multipolarity, then Bitcoin mining is being geographically diversified. We've got too much exposure to American public companies that host the FIC right now. That's on the mining side. What happened on the node side? Well, we gave too much power to one team of developers called Bitcoin Core. Immediately, they started making changes that many people disagreed with because no one was looking at keeping their eye on the ball. We had a resistance movement that came along and said, hey, here's an alternative node implementation. Now we can choose between two different nodes. That's a good thing. Now everybody's asking questions. We had a regime change at the developer side as a result of exposing some of the different compromise operations. These are all really good things. This is an open source boardroom. So we're significantly better off on the code side because we're questioning and we've got alternative implementations. That battle is going to be, continue to go through. What about on the ownership side? Well, everyone, we gave up 3 to 4 million Bitcoin to Wall Street. So now they've got, it doesn't matter. It's not proof of work. It's not proof of stake, sorry. So we're okay. But we're giving them the vehicles with paper Bitcoin to manipulate the price by centralizing as much Bitcoin as possible, which represents the amount of paper Bitcoin they can create, which represents the amount of manipulation they can do on the price. We resist against that. Fortunately, the vast majority of Bitcoin is still in self-custody. And so we continue to monitor that we are in a battle for centralization versus decentralization. And we shouldn't take that for granted. So the future of Bitcoin is how many of us are going to participate in the real battle of self-custody, running nodes, and engaging in the open source boardroom and supporting initiatives for more decentralized self-mining. That's what the future of Bitcoin looks like. And if we win that battle, either Wall Street will control the short price to manipulate more over there, and if you fall for it, you'll just be the person that gets margin called in a perpetual future with like Nakamoto right now, where 85% of their Bitcoin is held as collateral in Kraken, which is now a bank. Mm-hmm. And I am a shareholder in Kraken. Once it IPOs, I'll be exiting that position. But this is the type of thing that you have to recognize. But the rules of Bitcoin haven't changed. You can own your own money, you can spend your money, and the monetary policy will never change. But the paper Bitcoin market has changed. And we have false prophets that people are idol worshipping. Understand the incentive structures, because the whole game of Bitcoin was incentive structures, governance, game theory, and rules that are enforced through mass and code. That's the real game.
In an ideal world, for you, what needs to happen?
I will continue to try and advocate for as many. In an ideal world, more and more people need to become sovereign. That's it. Mm-hmm. Because we vote with our money. And when we're sovereign, nobody can get in the way of that vote. So my mission is aligned with yours, because most people are subordinating. Most people are becoming more and more subordinate. Most people are, you will own nothing, and they're not happy. So once they pay them a UBI and a programmable money, they'll be happy thinking that that UBI means they don't need to work anymore. That is a weak person. That is somebody that we're getting more and more people that are choosing suicide over life. Those trends are going in the wrong direction. That are choosing not having a relationship because men and women hate each other. That are choosing not having children because they think it's unaffordable to have a child right now. That's extinction. That are choosing isolation. That are choosing, or they're unable to afford food that is the nourishment that they need because their farmers are going bankrupt and being rolled up into a petrochemical company that's poisoning us. More and more people are being aware of the psyops. More and more people are being aware. But if you continue to believe that it is changing the politician and voting harder that is going to change this, then you're stuck in a proof of stake network with a foundation that was funded by Silicon Valley to steal as much Bitcoin from you as possible. And so what do we need to do? We need countries that are able to become as sovereign as possible in a multipolar world. They can choose between China Belt and Road Initiative, IMF, or even building their own assets, their own sovereign wealth funds. There's a reason why it's called a sovereign wealth fund, and they can use their own resources in order to build that. Companies need to use jurisdictional arbitrage to become as sovereign as possible, and individuals need to become as sovereign as possible. That's what needs to happen in an ideal world. Now, I am fully aware that the vast majority of people won't do this, won't listen to this, won't hear this. And so we just need as many people that are going to be living, because the vast majority will be collateralized debt obligations on a UBI in a transhumanist agenda that will make people extinct. And we need sovereign. Here's what I'll end with on that rant. There are two types of people the system doesn't mind. One of them is people that are broke, subordinate, and loud. They can complain about children being used in sex trafficking operations to prop up blackmail operations in the Epstein class. No one cares. They ain't got any power. They can yap. They got freedom of speech. They can talk as loud as they want, and no one will do shit because they don't matter. The other type is the wealthy people that are subordinate, the Elon Musks. Elon Musk depends upon military funding contracts, borrowing against his stock, so that he is leveraged to the kilter to buy assets like X, which are being used to build social credit scores. And the so-called trillionaire is dependent upon the FIC to issue more stock, create an ATM, borrow against it, and fulfill their agenda that gets them more government contracts so that they can push that data back to the NSA, and they can build out people's social credit scores. That's subordination. They don't mind incredibly wealthy people in their control grids. What they don't want is people that can talk because they don't have to worry about the bank or their shareholders, that has wealth outside the system that can't be shut down, that is incredibly wealthy, that can then actually make a change. They can lobby, they can send a message, and they can reallocate their capital. So we need more of those. And there's very few of those. Most people are subordinate to their sponsors, subordinate to the algorithm, subordinate to the debt of their bank, subordinate to their shareholders, or subordinate to an oppressive regime, whatever it may be.
Actually, I've been listening to your conversation with Peter McCormack, where you discussed the proof of reach concept. That I know the algorithms on social media platforms, centralized platforms, are constantly changing. And me as a podcast host, but as a content creator, if we release it on X, we get like 500,000 views. If we release it on YouTube, it shuts it down for no reason. Or like some of the episodes are doing really well, you need to apply to that. You need to be compliant with those algorithms in order to get the big reach. But I think overall, I'm going to end it off. We can go on for another hour if we want. I actually tried to not talk about Iran, but you got it in there at like 50 minutes. I think it's a super important topic, but I think that what you have been telling here is fascinating, and I would like to thank you for that. It's opening up my eyes. It's continuing my progress on my journey to become as sovereign as well known as possible, or knowledge as possible. So I would like to thank you for that. For people that are looking to read more upon your content, I'm sure that they will find you, but where can they find you?
Yeah, we can come back and do another podcast on Iran and how it relates to you, because it really is changing the world. Have no doubt. The fact that the deal that has just been signed is bigger than anyone can ever possibly imagine. You know, this is a major moment, so I'll leave that cliffhanger for another episode.
That's good.
But I give real-time updates on X at Simon Dixon Twit from when it was called Twitter. And I try and always follow the money and retranslate things in a meaningful way if you enjoyed the types of updates I give here. Then I have a YouTube channel, and for myself, it's Simon Dixon 21. But I do like 2 to 4 hours every Friday where I go through all the events. And for myself, I retranslate them in terms of the monetary impact and make projections of where I think it goes, and then analyze what I got wrong. You're welcome to join me on YouTube, subscribe, and get those updates. But then some people just don't have time to listen to that. So I built a structure on simondixon.com that takes those big updates, condense them down in through AI into a written blog, 5-minute video, 30-minute video. And then I'm trying to build a membership site. No sponsorship, no agenda. I'm at that stage in my life where I can do that, very blessed because of these sovereign approaches. So that in case I get shut down on any of those networks, on my podcast or anything, at least we've got a community where I can still give these updates without YouTube saying no.
Well, all the links will be in the description beneath. And once again, it's been a great conversation. I would like to thank your time. And yes, would love to do another one, hopefully in like a few months when Iran or something else is happening. There's always enough to discuss. So thanks for your time and being part of our show.
Thank you for having me. I enjoyed it a lot.
I think there's a small group of power structures that sit above countries that are running the show. There's no political solution in the West. There's no democracy, it's all a lie. The government is a distraction. The left versus the right is a complete distraction. You need a theatrical moment to define the end of empire and the transition to the New World Order. There is a way of breaking the system if we wanted, but they don't want you to know that.
What's the way?
The UK, the European Union, Australia, Canada, the collective West is fully subordinate to US corporate interest because they're rolling over the debt-based Ponzi scheme.
Yes.
They have access to the financial industrial complex tools. They can create a currency war if they want to destroy your wealth. They can laden you with debt, which they can roll over. They can use intelligence and military in order to destabilize your country, turn genuine riots into color revolutions, take away somebody that represented the people and install a dictator that takes the corrupt money in order to privatize all their resources and make sure that Chevron, Exxon, Lockheed Martin, General Dynamic, JP Morgan, the IMF, all can come in and use your country as an asset management portfolio. So most people, when they hear this, they think, is this some kind of organized cabal? It's actually not. It's a ruthless game of betrayal at the top, power dynamics and access to capital, and you can throw people off the network and then operations go wrong. It's a ruthless game. America is getting into this extreme divide and conquer political polarization. You've got suicide rates at all-time high, the 10th largest cause of death in America. You've got drug addiction at all-time high. You've got wealth inequality at extremes that are causing extreme polarization. I know how Wall Street works. I know how Silicon Valley works. How do I get free? And I tell them, own more Bitcoin every month than the last month. Own more Bitcoin this week than last week. Own more Bitcoin today than you did yesterday. Self-custody, run a node,
provide and invest in community infrastructures. Build your freedom. So we need to decentralize money, we need to decentralize artificial intelligence, and we need to decentralize control grids through decentralized communities. If you fund your farmer, they want your farmer bankrupt because they want you having artificial food that's manufactured in some technical industrial complex. If you want to know what they want to do to the world, what it could look like, look at what they rebuild in Gaza. Some are completely subordinate debt slaves. That's what the financial industrial complex wanted to create, which is make you a collateralized debt obligation, where you earn just enough and you work your whole life just to pay the interest. And as you progress, you take on more debt and pay more interest. And you do that forever. That's the slavery. And this is the game of investment banking. You build all the products around it to subordinate governments, companies, and individuals. That's the asset stripping phase. Europe is being systemically asset stripped, and that's why the war with Russia and Ukraine will continue probably for another 3 years. The end game here is if you look at what Larry Fink will tell you, you will own nothing and be happy. How do you achieve that? And then when you manufacture crisis, each crisis leads to concentrating wealth upwards. And then they want to make you happy. How are they going to make you happy? They can do that by giving you on a universal basic income. And so you reset the world order into multipolarity and build a global control grid. Every capital flow in the world is telling me that that's what's happening when you follow the money. People want an easy conspiracy theory of 300 people sat in a room in an organized cabal. There's no such thing as a democracy. Democracies are captured. Almost every government is subordinate to that capital structure. And so they created an operation called Operation Choke Point 2.0, where they created companies that you could destroy to remove credibility, manufacture a crisis, take out all the banks that were servicing the crypto companies and replace them with Wall Street. No personal attack against Michael Saylor. He works for his shareholders. Strategy is doing what it was designed to do, which is create an arbitrage vehicle for manipulating the short-term price of Bitcoin for trying to centralize as much Bitcoin as possible.
In our last conversation, you were basically setting up that the end of the Iran war would come right in line with the IPOs.
I think it's already been signed, and now they're just playing theatrics. They're trying to time it with the liquidity needs of the major IPOs that are coming.
Where do you think we're heading next? What's your read on the situation?
Who won? The financial industrial complex and transnational capital won. The reality is China won. That means that they can control both the petrodollar and petro-yuan. If you think Trump works for the American people, then nothing makes sense. Trump's a transaction guy. His job as a deal maker is to put deals together for his lobbies. The markets were never saying that this was a real war. If there was a real war, I was saying gold would be moving in parallel to oil. They have completely cornered the short-term price of Bitcoin to manipulate it, but their goal is to get your Bitcoin in custody. The technical industrial complex are ushering in an Orwellian AI surveillance state, one world control grid, social credit scores, central bank digital currencies, stable coins. You will own nothing and be happy. We'll custody the assets, you get the token, and you become a perpetual gambler. Trump was installed with significant funding from Elon Musk and the technical industrial complex, significant funding from the Mellon banking family and the financial industrial complex. And then the third largest was Mariam Edelstein, the connection to Israel and the military industrial complex.
Three of the sharpest minds in finance, intelligence, and surveillance research in one room for the first time. And what they laid out should terrify every single person watching.
Don't listen to anything anyone says. Let's look at what they do. So whatever Elon says is rubbish. Whatever Trump says is rubbish.
They mapped the control grid, the $1 trillion print they say is coming, the crypto bill they call a Trojan horse, and the one move you have left before BlackRock owns your entire neighborhood.
They're deliberately trying to manufacture civil unrest. I have to take people to a dark place because...
No, let's do it.
Once you know how the system works, you know how to win. And so here's how we win. We're not going to fix the system, but what we can do is... Absolutely. Commercial banks, they create, dollars, pounds, euros, every time they issue a loan. And in order to issue more loans, their first goal is to turn every single individual into a collateralized debt obligation by getting them addicted to debt, either via mortgages, via credit cards, via student loans, via inflation that doesn't increase at the same rate of their wages. You effectively turn every individual into a debt slave. They socialize the losses across all the individuals of a nation, and they privatize the gains. Your vote doesn't matter because they have access to the deep state. And so once you understand this, you realize it's a big club and you're not invited.
And we're not in it.
I believe right now we are in a shift to multipolarity, and we have created an environment where our governments are fully captured. And once you understand the rules and who's in charge, it's easier to understand where we go next. And our media is just propaganda, 100%. And algorithms are utilized in order to weaponize us as almost like products. But you vote with your money is how you win. If you think that you vote and your politicians need your vote, you're going to lose this game, because the politicians and the presidents and the prime ministers, they all work for lobbies.
I'm joined today by somebody I've been listening to for a long time, Simon Dixon. I will tell you, Simon and I have two things very much in common. We both left investment banking disgusted by the corruption, and we were seeking freedom. And our pathways have been different, but I think, Simon, you and I are sort of looking for the same thing. How do you navigate an unbelievably corrupt financial system? And I really appreciate everything you've done to bring light to that, and everything you're doing to try and help people be free under the circumstances. But you have extraordinary experience in investing in Bitcoin companies. So you've invested in exchanges and a wide variety of Bitcoin-related companies. So you have a lot of experience as an asset manager and investor and venture capitalist in the Bitcoin area. Right? Here's what's interesting, though. You've learned a lot from failures. So it started with your dad losing his pension fund in the dot-com bubble, which I can't imagine how frustrating that must have been. I was very frustrated during the dot-com bubble. And then but you had one custodian fraud, essentially, or one fraud in the Bitcoin space or the crypto space. And you lived through the bankruptcy experience, which is quite an extraordinary